The global economy is continuing its downward trend. The financial system teeters on the edge while maintaining the facade that somehow we have nothing to worry about. We have the occasional report of positivity from paid actors and institutions, but overall, the data is not reasonable. It's not okay to have millions of people subsist only by help of government. Something is broken, and those in charge are not there to fix it. In fact, they're only making it worse. You came here for the truth, so let me unveil that for you. All of the policies that we have seen that have been going in over the last few years or the last few decades, in fact, have only made problems worse. I really noticed this back in 2000. Everything globally started to synchronize, and it was then accelerated after the financial crisis. This is a big problem, of course, because the solutions are actually what caused the problem in the first place. So of course we're never going to be able to resolve anything. Of course we're never going to be able to actually make things better when they keep doing this over and over again. I talk about it here all the time on the channel, but of course I broke that down completely in my books. Today I have a lot of information. I'm going to talk about the economy. We're going to talk about the stock market. We're going to look at what's going on with real people and how things have really changed during this year especially. Okay, let's begin. Americans are raiding retirement savings right now. This is when you know there's a problem because people, they were putting into that RRSP or that 401k or that super. They were trying to do some sort of savings plan, and then we have an issue that comes around and they get smacked in the face, unfortunately. Nearly 3 in 10 Americans have decreased or stopped their retirement savings due to the economic fallout. Savers, especially those who lost their jobs or work hours, may have no other option. I just highlighted something in the last few videos where the average person has been pulling money from their house like an ATM, and the debt in which makes up the total value of these homes has reached astronomical levels. This is important because you're seeing the homes down the street, you're seeing the people driving the cars, they're at the mall, they're walking down the street, they're doing this and that, but underlying all of it, there's a much different situation going on. And you're never going to see it in the mainstream. Yes, you might get a fact or two, but it's not pieced together, and you're not going to understand the story unless you see it page by page. Lumber's staggering rally has new homes selling for $16,000 more. This is an issue I've been covering. In fact, I said you shouldn't have been buying the 7 shares of Amazon. You should be buying 7 2x4s because the price has been skyrocketing. It's been unbelievable. And as a result of what's happening in places like Oregon and California, the prices, of course, most likely will be increasing because the demand is going to be there. There are other problems along the way with the supply chain and so on. This puts a bigger burden on people, obviously, and that's not a good thing right now. But the reason I'm talking about this is not necessarily because of lumber, although that's one thing. We are seeing prices rising on so many different products and services that people need to buy. Sure, if your lettuce went from $3 to $3.25 or $3.50, maybe that's not a big jump, but if your whole basket of goods starts to increase every week, it's going to start making an impact when you don't have the funds right now, the disposable income right now, to be dealing with that. Of course, if you look at the inflation that the government provides, that the Federal Reserve looks at, none of these are accurate, and that is truly unfortunate because it is a disservice to the people. Eviction filings by big landlords surged. This is quite interesting because we're looking at a quintupling of the amount. Renters and building owners under distress with stimulus lacking. That's right, we need more stimulus because more stimulus is going to fix the problem. All they've done here with this moratorium is delay the inevitable. That might be good for the renter, but in the end, there's still a crisis to be dealt with. I see the comments very regularly. I see the articles. I see the positivity out there saying, hey, everything looks fine for me. I turn around, it's fantastic. We have yet to see all of the bad news. All I'm showing you here, not in this video specifically, but in what I cover, is simply that we have certain things that need to be faced at some point. What about the derivatives mess, which I'll talk a little bit about today? Nobody wants to even touch that information. Why? Because nobody knows when that's going to hit. But it's underlying there. It stinks real bad. But of course, just sweep it under the rug. We're quite surprised by the number of filings that we saw. What's striking is that we're not talking about mom and pop landlords, we're talking about gigantic companies. This, of course, will be a problem going forward. Many people are simply relying on the government to be there to ensure that they don't get booted out onto the streets. But how long can it persist? Biggest crisis test is still to come with insolvencies, according to the BIS. Further along in this article, policymakers are facing the most economically challenged part of this crisis in avoiding the creation of zombie companies, according to the BIS, an issue that we have talked about numerous occasions, and at least the BIS is highlighting it. Ultra easy monetary and fiscal support is helping companies avoid liquidity crunch after the issue here in 2020 closed down businesses and demand collapsed, but that stance bears risks longer term. Exactly what I said just a few minutes ago, right? There's a delicate balance to be struck between, on the one hand, withdrawing it too early, which will obviously have short-term costs in terms of economic activity, and withdrawing it too late, which will mean that it will not favor necessary structural adjustments. They're trying to put these backstops in place. They're trying to be there to provide stimulus. They're trying to take all these measures, but it doesn't actually fix the problem. It doesn't address the root cause. People will say that if they simply opened up the economy, then everything would be fine. But look at it today. Demand is still down. The weakness is there. And I'll show you what's going on with oil. I believe that I had that article set up here. We had problems in 2018. They were structurally there. We had problems in 2019 as well. And as we moved into 2020, the stock market started to fall. But look, the economy was already weak prior to that, and we need to understand it in order to get the rest of the data to make sense. That brings me into this issue here. Bank credit swaps signal concern over the world's weakest lenders. Lower rated banks' credit insurance costs remain elevated. That's according to the BIS as well. Credit investors are unconvinced about the ability of the world's weakest lenders to weather the economic slowdown. Remember what happened with the credit default swaps with Greece. Big issue. Many have said this was what took it down initially. You've got a problem that's going on in the financial system that is always rearing its ugly head, not when things are fine, but of course when there are problems. So it looks good for a 5-year period, 10-year period, and then suddenly, oh, I didn't realize there was all this debt here. Oh, I didn't realize there was all these weird things called derivatives lurking around the corner. Just pay attention to what's happening and you will see how unbelievably risky this entire system that they've built for us really is. Manhattan's newest skyscraper opens up to a dead midtown. I've always noted this as you see throughout the cycles where these new big skyscrapers start to come up right at the peak of any bubble. Let's see what happens with commercial real estate as well as how that has an impact on businesses and even residential. Yet another company has gone bankrupt. The owner of the New York sports club chain sought bankruptcy protection from its creditors, unable to keep up with the debt payments. As I said, we're only at the beginning of this. Many more will be added to the list. And the Little Munchkin was forced to come out again and say a few words. Quote, "Now is not the time to worry about the fiscal deficit or the Fed's balance sheet." Well, the former Goldman Sachs and movie producer and maybe a character on The Wizard of Oz, but he has come out, said that this isn't the time. You shouldn't be worried about it. Quote, "Now is not the time to worry about shrinking the deficit or shrinking the Fed balance sheet." Further down, you could read more of the quote. Basically, what he says here is that the Federal Reserve did shrink the balance sheet prior to what we had here in 2020, or really 2019, because they started to increase it dramatically in late 2019 before they acknowledged there was a crisis. And that gave them enough room to increase it. That's right. If you remember, it ended up at about $3.5 trillion in 2019. That's where they brought it down to. This is, according to Munchkin, indirectly, he's saying this number, 3.5 trillion, is what they had promised, the Federal Reserve had promised, normalization of the balance sheet. So $3.5 trillion is normal. This was a good chart that I pulled from Bloomberg, and I really wanted to show you because it highlights not just what's going on with the US and the Federal Reserve, but you can see the other central banks as well. Central bank crisis policies. Is the policy in use or been used previously? And it just gives a breakdown: Australia, Brazil, Canada, and so on. And you can see near zero rates, negative rates, government bonds, so on. It just goes through. I'm not going to cover each and every one, but I know I've got people from all over the world asking me, can you do a video on this? Can you do a video on that country, on this country, on that country? I tried to find relevant data for you guys, so please understand that. Here is some that may be useful to you, and you compare what, for example, is happening in the US to a situation in Sweden, for instance. Take a look. Whenever we have a situation where there isn't prosperity, we tend to have bigger problems. The solution to so many different crises is increased prosperity. If people feel more prosperous, there's less crime, less bad things come up in the news. This is for Spain. The illegal occupation of houses grows 58% in 5 years. The province most affected is Barcelona, 66 complaints per 10,000 homes. There's much more to this, but whenever I find something, whether it's for Spain or whether it's for Australia, I want to bring it to you, show you what's going on, not just if you're in that country, but we should be aware of what's happening all around the world. Wisconsin's food bank operators are optimistic despite expecting a spike in emergency food needs. This has been one big issue right now. Just over the last few months, the demand for food banks has been unbelievable. It's not just food stamps. It's not just an increase in the amount people are spending on their credit cards. Food banks, to me, is a real big tell, and it's unfortunate to see the demand. That is very telling, of course, but we don't know what's going to happen. It could be very different in 2025, for instance. I just want to show you this not just because of the commodity itself that affects, of course, people that are trading it, people that are holding it, people that are invested in these companies, but also there are so many jobs, there's so many industries that will be impacted by oil not being used the way it was. Yes, the cars might need it, transport systems, and all the other products that are created from it, but if the demand isn't there, if things aren't moving the way they were before, that will impact people's lives. And in some interesting news, you're seeing Amazon, well, all of these companies out there are basically laying people off, going through bankruptcy. You're seeing Amazon hiring 100,000 full and part-time employees across the US and Canada. It's literally like a completely different world when you see the data coming from Amazon and you see it from the mom and pop shops. Certainly, we're going through a technological change today. There's no doubt about it. But the acceleration of this process in 2020 has surprised everybody. I'm sure those at Amazon as well. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. All you got to do is click one button to support me. Thanks for being one of the 10% or less that do that. If you want to learn how to sell stuff online, you want to understand Amazon, see what it's all about. You don't have to pay anything. All you got to do is check out my free course, theamazongps.com. Have you seen my 2 books yet? If you want to check them out, you can actually flip through the pages for yourself at the link in the description. If you want the audiobook instead, themoneygps.com. Wait a second, don't go anywhere. This video here was really doing well. A lot of interest. Have you seen it yet? If not, you definitely want to. Click it. I'll see you there.